Okay, I think it's a good time. People have been streaming in constantly, and I think most of you have already arrived for this webinar. So, without further ado, I'll just start the webinar proper. So, this is in a fireside chat format. This is one of the first time we will have a fireside chat format, and in doing so, we'll just be having a casual conversation. But before that, I'll make a short introduction about what this event is about. So this is a webinar about the future of green finance and sustainability, brought to you by iSTOX and in conjunction with Tek Yew from SFA, Singapore Fintech Association. He's also currently a partner at Oliver Wyman. So I'll just flesh out a short disclaimer before the webinar. This is not an advertisement making an offer or calling attention to an offer or intended offer. So I'll just give a short introduction to iSTOX. What we're doing is that we are building a platform that allows end investors to invest in private market investments such as hedge funds, venture capital, private equity, as well as startups. And our vision is to give you equal access to the financial markets through a regulated, integrated, and community-driven platform. We are fully regulated by the MAS. In terms of the user experience, you can just simply log into iStocks.com and you are able to create your own account if you are an accredited investor by MAS definition, and you are able to make investments on the platform into like real estate, private equity funds, as well as hedge funds. Our speaker for tonight, Mr. Chia Tek Yew, he has been very monumental in the Singapore Fintech Association. He's the chairman of the Sustainability Committee at SFA, and he's also the market leader of at Singapore in Oliver Wyman. One fun fact that everyone should know is that Tek Yew is actually running for president of Singapore Fintech Association in 2021 for a 2-year term. So we hope that he can do his best for the community in Singapore and help to make us the fintech hub of the region. Yeah, he has 30 years of consulting experience and he's a subject matter expert, specifically in financial services, working with central banks and policymakers. Previously, he was the KPMG Singapore Head of Financial Services Advisory. So a little bit about myself. I'm Nigel from iSTOX, the head of community and marketing partnerships. I'm responsible for developing the ecosystem as well as investor education. Prior to that, I'm also a management consultant in the past at Oliver Wyman, and that's also one reason why had the privilege to meet Tek Yew and learn more about what the Singapore Fintech Association is doing this year. So before we begin with the fireside chat, I would like to talk about what green finance is and what is the climate emergency that we are currently facing around the world and why finance is so important in order for us to solve all these issues. So the UN Secretary General said this year, Mr. Antonio, that 2021 is actually a make or break year to confront the global climate emergency. Even though the COVID pandemic has lowered things like air traffic as well as supply chains, it's not going to solve the problem of climate emergencies. We are losing 28 trillion tons of ice in under 30 years, since 1994 to 2017. And because so much ice has been melting into the oceans, it's not only causing global warming, but also rising sea levels. So how much sea levels has been rising each year? Is actually 3.3 millimeters a year. So while it may seem small, it's actually more than 50% increase in yearly rise compared to in the past before 1990s. And if you think about it, by in 1 century, the water sea level would rise by 30 centimeters if this goes on. And many places around the world will be flooding. In terms of apart from all these just sea levels and stuff causing natural disasters, there's also 51 billion tons of yearly greenhouse gases being emitted into the atmosphere. And we've seen in recent years that there is 51 billion tons, and we've seen in recent years there's been a lot of climate related disasters and forest fires. And according to Breakthrough Energy, something must be done to reduce this greenhouse gas emissions uh, in order to stop all this unprecedented rate of climate disasters. So, what are governments and companies doing in order to reverse or alleviate this situation? There's a lot going on in green financing around the world, and there are four main types of bonds and loans that can be used for financing. So, for example, green bonds are the funds where proceeds are used to fund green projects, equipment, and assets, such as renewable energy plants or creation of solar panels, while sustainability-linked bonds and loans, their main purpose is maybe still in investing back into the main company. However, it's called sustainability-linked because the KPIs of these loans are pegged to UN Sustainability Development Goals. So what this means is that if the issuer of these bonds and loans are able to hit the sustainability goals that they set themselves, they are able to get lower interest rates or better interest rates as an incentive for linking their loans to sustainability. Whereas for green loans, the purpose is solely for the green projects like renewable energy. So how has the world been evolving? Actually, there's been a lot more money into green and sustainability in the past years. So from 2016 to 2020, the CAGR of almost 50% rise per year in this sector. And we must also acknowledge that because of COVID and because of increased attention around the world, there's actually 54% of global emissions that has been covered in one way or another by a government or a company setting a target of net zero emissions. So this is very good start, but now we also need to execute in order to make this situation happen. In terms of energy transition, which is a big topic even in Singapore, moving from, for example, coal into cleaner forms of energy like wind and solar, there has been global investment of $500 billion in 2020. And the largest issuer of sustainability and green bonds and loans have been USA, Germany, and France. So much more can be done in Asia in order to catch up with this front forward-thinking economies that have been doing this even ever since maybe like 5 to 10 years ago. So back here in Singapore, the MAS have already launched the Green Finance Action Plan to support our transition to sustainability. This is on the back of the recently announced Singapore Green Plan 2030, which has a lot of initiatives in order for us to reach a net zero economy. I think if you search it up on YouTube, you are able to see the highly impressive video that we have the government have created for the Green Plan 2030. So there are four key initiatives in this Green Finance Action Plan. First is there have been new guidelines of environmental risk management for bankers, insurers, and asset managers. This is to help them understand and frame risk management in the context of environment. That's the third. I'll jump to the third before going to the second. Is the Global Fintech Innovation Challenge. Tek Yew has been very monumental in organizing the Global Fintech Innovation Challenge last year and hopefully this year as well. And the theme last year has been green and sustainability. So even in fintech, we have been doubling down our efforts on how we can make capital markets more efficient, how we can make insurance markets or even banking better for the green sector. And there's a lot of education going on, as you can see in the last initiative, the Singapore Green Finance Center. So it's very good initiative sanctioned by our organizations, and suggest that you can also sign up for the newsletter to keep updated on what is going on in the green space. I would like to jump, before I end my short introduction, jumping into the green and sustainable bond and loan grant schemes. So the government has been very supportive. MAS will be deferring up to 100,000 of eligible expenses in the bond grant as well as the loan grant schemes for expenses per loan or per issuance. So this is a huge encouragement to the sector, to banks as well as issuers, that we have strong support for us to look into green and sustainability initiatives, that this is an industry and government-wide push. And I think this is the right time for even fintechs to consider how we can help and play a part. So later in the fireside chat, we'll talk about what this means for investors as well, so that we can make sense of how to capitalize on these trends. In 2019, there's also a $2 billion green investment program, in short GIP, where MAS supports fund managers and asset managers who will be supporting driving regional efforts to make Singapore a green finance center, or developing or better and greener capital markets for the country. Without further ado, we would jump right into the fireside Q&A with Tek Yew. So hi Tek Yew, thanks for joining us.
Thanks for the intro and thanks for the good words.
Yeah, very, very happy to have you here. I think you are really the subject matter expert. You will see from a government point of view, from different countries, how we are pushing towards a greener economy, a greener future. So I think it's really good for our audiences today to learn more about what's next, what are the things we can do, and what will be changing in the next few years. So globally, right, the World Economic Forum said the bond market will be worth 2.36 trillion by 2023. So in Asia, what are the various projects that bonds or loans have been enabling in the green space?
Yeah, so I think it's a mixture of green financing being one is green loans, right? Green bonds and green investments, right? The three of them in combination, I think, have been chasing what we see as good quality projects. So I think what you see in Asia, in particular in Southeast Asia, is there is generally a gap between investment appetite, that means lots of people want to invest, and investable grade assets to invest in. Right, so I think that's where the real funding gap is. It's not so much what are the projects out there. There are a lot of them brewing. There's a lot around solar panels being solar farms being created. You see some of this where solar farms are created in Malaysia, but with the solar power piped into Singapore for distribution. Right, we are hearing things about hydrogen farms or hydrogen plants being built in Australia, right? That could potentially be piped into Southeast Asia, right? That will obviously replace the coal, with the cleanest form of energy, right? Which is hydrogen. Yeah.
Thanks. Next question is, what are some challenges that you think these borrowers or issuers face in this region when they want to raise financing for green projects?
So I think the biggest one is really around measuring the impact, right, of just the impact of whatever project you have. So, for example, you want to issue a bond to build something, right? How do you actually provide enough data so that the banks will lend? Secondly, provide data that can measure the impact, right? So if you put in solar panel, how much energy are you really saving? What's the impact of that? How do you actually quantify that? And the third one is, how do you even measure the commitment over time, right? That means, how do you measure this, not just a one-off when you issue the bond or get the loan, but throughout the period the project is undertaken.
Do you think there are challenges in terms of like general investor education or like propensity to want to invest in the green space?
So I think the reason why SFA formed a subcommittee is the same with the micro lending business, right? Where the banks are always happy to lend to the big institutions. So if you are here in Singapore, you are CapitaLand, right? If you are Singapore Airlines, I'm sure that the banks are after your green projects, right? They are big institutions. Similarly, when they want to get a big banking facility, a lot of banks go after them. But when you start thinking about going down the supply chain, right, the smaller companies, the SMEs, those SMEs, even if they want to do green projects, will struggle on two fronts. One is being educated about what green projects are, how to measure them and all. And then secondly, getting funds made available to them, because the banks or the lenders have to have faith that these people are not what we call greenwashing, right? That's calling it green when it's not green, right? That they actually are green projects. So I think that's where that disconnect might be, right? So the whole idea is, how do we educate, how do we mobilize capital to even some of these smaller companies?
Yeah, thanks for that. I think what the MAS has done is also to introduce the sustainable bond and loan grant scheme that is not exclusive only to your SIAs and SEMCORPs. I think even the smaller medium companies can be able to explore such schemes, and I think that will be great for the industry in general. So my next question is, how can issuers, maybe medium businesses, seize the opportunities? And on the other hand, how can investors support this trend that we see coming towards us?
I think it's not, well, maybe I'm cynical about some things, right? But I don't think the SMEs by themselves say, I want to, go green, right? The pressure will really come when the supply chain kicks in. That means if you are a Unilever based in Singapore, or even Singapore Airlines, right? And you say that I want my supply ecosystem to also transition to green. So I will only trade, right? I will only buy things from manufacturers who are green, from suppliers who are green. That is when the pressure comes in, right? And when that comes in, the SMEs will now have to think about, okay, in order for me to meet this, right? How do I go about this? Right? Do I put in solar panels? Do I change my energy sources? Do I remove paper? Right? But how do I get as close to carbon neutral as possible? Right? And in doing so, they might need financing. Right? So there's a bit of education, but there's also a bit of pressure from the ecosystem.
Yeah, that's a very good point. I think that pressure, if applied correctly, can be good for the ecosystem as a whole and the environment. So, just one question that I'm curious about. What are the opportunities for investors when looking at this? Because investors have traditionally been just buying like stocks, bonds, maybe some exposure to alternative assets. And then there's this new thematic, green and sustainability. How can somebody go very serious if they want to allocate a percentage of their portfolio into this?
I think there are obviously different type of investors, right? So you look at the institutional investors, right? Most of them obviously now are looking at their investment objectives to include a ESG component, right? Environment, sustainability component. So for them, they have to find ways to meet the allocation, right? So if they, if I'm going to take at least 30% of my portfolio to be sort of green investments, they will have to transition to that. I think for the smaller investors, there is those who buy into this. This is for the future of our earth, right? The future of our children. And some people will say, this is something that I might be interested in, right? But actually ESG is very broad, right? It's not just on climate and all these big projects, but there are lots of other things in, whether it's food sustainability, waste management, and so on and so forth. So there are enough options for people to say, this is something I'm passionate about. I will take some of my investments and put there, right? So to me, in some cases, it's personal impact investing, right? The third type is, to me, if you think about the whole world moving over to sustainability, there is actually a lot of funding required in R&D, right? Research and development. So we all can act like sort of mini venture capitalists, right? If the bond size, the equity sizes are small enough for us to invest, your opportunity is that 5 years later, 7 years later, this might come, and become a new unicorn, right? So we see things in the data and AI space, we see things in blockchain, right? The next wave, I think, right, is really around sustainability, is really around health tech, right? So some of these teams are creating such momentum that if you don't invest in it, I mean, maybe it's called fear of missing out, right? But if you don't invest in it, 5 years later, 7 years later, you say, oh, I missed the big hydrogen idea, I missed the big, solar idea, right? There's something that you'll miss out. So I think for those who are a bit more optimistic, ambitious, more aggressive in the risk side, I would think that putting some money in this is like putting some money into VCs with a good vertical theme behind them.
Yeah, that's a very good point. Like acting like mini venture capitalists, investing small amounts. Yeah, by the way, in order to invest in small amount, it's not that easy for individual investors. So maybe at iSTOX, what we're trying to do is to fractionalize investing so that we democratize the access for investors. Yeah. So if you want to find out more, you can also visit the website. Okay, now we will move on to questions from the audience. So the first question for Nora is, in addition to debt-based assets, do you see equity-based tokens in the sustainable side becoming popular? So equity in sustainability.
I think equity based or even a hybrid, right, which is a convertible bond, right, will be things that will give you that sort of upside, that a VC looks for, right? So in the earlier stages, is operating like a bond, you pay interest, right? But if there is a idea that takes off and you could actually list it or go IPO or flip it, right? Your ability to convert from a bond to equity, will give you that sort of upside. So I will see lots of ideas coming in how to structure some of this.
Yeah, it's very exciting. There's a lot of brainstorming going on in this space, and we are very excited to hear the execution of these kind of investment opportunities. Next question is from Charlie. Would the government consider risk-sharing model for green loans rather than just defraying the issuances cost in the schemes? And given the lack of case studies and track record, how can they build confidence?
So the Green Plan 2030 you will probably hear more in the next few months, right? So I think every ministry, every agency is coming out with some commitment behind some of this. So I think government itself will create demand. That means they themselves will buy solar panels. They themselves will invest in hydrogen and some of these things. But the other areas that have come in where they are lobbying support, right, is also in the so-called risk sharing or de-risking, where it's not just about them investing, but they are investing. Say the National Research Foundation, for example, right? A lot of the R&D done in these areas is actually done at the research level, the university level. So they already de-risk the proof of concept prototyping a lot of things, right? Before this becomes commercial, that investment is already made, right? You have Temasek setting aside 100 million, right, to invest in early stage sustainability ideas. These are somewhat higher risk than others, right? But at the same time, you see foundations being actively, I guess, educated on some of these things, right? So a lot of foundations typically they give charities, which is scholarships and also things. Now, effectively, they are being mobilized to say, hey, the other things that you might want to think about is really early stage investing into some of these areas. But I think the one that we have done as somewhat a study is the one that needs what we call concessionary capital, which is government capital or agency capital, whether it's ADB, the World Bank and all, is what we put in an extreme end, which is high impact, high risk, long term, right? Which means they are very, very big projects, right? It's really building something all together. So for that sort, right, usually the early stage pre-commercialization capital tends to come from government, right? So you see a lot of all those things coming in. Yeah.
That's very good to hear. Any other thoughts about the carbon tax? Would it be effective in reducing pollution? Singapore has mentioned a lot about this carbon tax and we're proud of having it.
So I think there are two. Well, maybe the issue again is measurement, right? So when you look at carbon tax, the easiest is what we call the scope 1 emission, which is the direct emission. So if you are still manufacturing, you have a manufacturing plant in Singapore, and the emission comes off actually from the chimneys, right? You can easily put a carbon tax on that, right? Beyond that, then it's really going into how much electricity you use and all those sort of things. So I think that is one where the impact for Singapore might be less because we really don't have that sort of heavy industries. But the one that will impact us is carbon tax on consumption. That means if I fly first class to New York versus flying economy, right? There might be a carbon tax attached to the price of my air ticket, right? So that's consumption based. So that will be another way that the government will look at some of this. So I think it'll be interesting to see how they define it, right?
Yeah.
But obviously, the most equitable is always consumption based, which I use, I pay, rather than if you put a carbon tax across, even asset ownership, but not usage based.
Yeah. Oh, this is a very interesting question. The person asked that socially responsible or sustainable investments tend to be perceived to return lower than traditional investments. So why is this the case, and how can we find good returns that are sustainable as well?
So I think in the previous era, I would agree. Okay, so but today you're starting to get this momentum, right? Which means that, like I said, the pressure from so many areas are coming in, and the investment by the government. So if we say today, you look at things like Impossible Burgers, right? Impossible Food, plant-based and everything. In the old days, I would think that it would be very hard to make that a commercial business, right? But the wave of interest in such things will make adoption of something like this much faster today than even a year ago, right? So I think you'll start to see some ideas get commercialized faster because the education phase, right, and the scaling up phase is significantly reduced nowadays. So I won't think that all ESG, sort of sustainability based investments will be bad investments, right? But today at the education stage, people price it slightly lower. I mean, it's the same as, do you want to pay for a paper bag, in the supermarket, right? If everybody charges 50 cents for it, will you pay? Again, it depends on how socially responsible you want to be, right? But those sort of things are not commercial. That's behavior changing, right? But the commercial part is if the government say that you cannot have any plastic bags and you have no choice but to have paper bags, right? Then obviously there'll be a market for paper bags, right? The alternatives are taken away.
Yeah, I think we've been seeing that more and more, and now it's very normal to not receive any plastic bags when you check out, even in Singapore, which used to be the case only in Europe and maybe 5 years ago. So I think we have just one last question to end off. Thank you for your time, everyone. Do you think sustainable investing would be a long or short-term trend?
I definitely think it's a long-term trend. I actually think that it depends on what you call long-term, right? But obviously the intermediate term was 2030, right? So everybody's putting pressure on what is our commitment to 2030. But there are obviously programs that will go up to 2050, right? And I think the question for us in Singapore is, what role can Singapore play in this whole green financing concept, right? Because, like I said, we don't have enough plantations or heavy manufacturing industry to transition out of, right? So our opportunity for just pure Singapore investments is limited, but we have a lot of financing availability here. We have the ability to structure bonds, structure some of these things. We have probably a more educated population that is interested in this, particularly with the younger community and everything else. And we also have the most multinational headquarters operating out of Singapore, right? So you look at the Southeast Asia headquarters, Asia Pacific headquarters, they can influence their supply chain and their community across, right, the region. So those are the levers that we have to play. And I think because we have those levers, investing in Singapore on this area will be something that will be, will be long term. It's part of our transition into not just green, but moving away from just purely a red dot, bounded by a physical geography, to a very big green cloud that's not bounded, right? So that's the idea of the vision of how green we can be, because it's cross-border.
Oh, that's a very good analogy, from a green city to a green cloud. That's a very good aspiration we have. I think I will end off this short fireside chat, which I've learned a lot even from my questions and answers with you. And the further readings that we have is for the people here who have tuned in. If they want to know more, there's actually a lot of resources out there in terms of, like, for example, looking at the Earth 360 video, how NASA has been putting in so much effort to look at how the world has been changing. And that will actually, it actually inspired me to focus more into this green movement as well. So thank you so much for your time, Tek Yew. We hope everyone enjoyed this fireside chat, and stay tuned for more fireside chats in the future. Thanks, Tek Yew.
Thank you.
Thanks, everyone. Have a good day.